This is the last session of the day and the last session of the Rise Up workshop series. So excited to introduce you to Noemi Dibayula. And I'm going to start by just like a little bit a personal, how I know Noemi and how I got to know her. And then I'll also do an introduction to her, and then I will pass the mic over to Noemi to begin her presentation. So I know Noemi, I've known her now, I guess for what, a little over a year, maybe a year and a half, 2 years, something, maybe a year and a half. And I know her as an investor and a businesswoman who, in short order, launched a successful and thriving accounting and bookkeeping practice that's based out of Montreal. And she is services bilingually clients all across Canada, particularly small business. And so I'm going to go ahead and read her bio, and then Noemi can get started. So with more than 10 years of experience in accounting for businesses of all sizes, Mrs. Dibayula is the founder of Accounting ND, or in French, Comptabilité. Her aim is to deliver accounting services at a human scale and equip entrepreneurs with the tools they need to gain financial clarity, grow their businesses, and experience peace of mind. And I know in our community, having a grasp on accounting, along with what we learned in the previous session about financing and fundraising, these two things are what will take our businesses to that next level: more money, more profits. And so I'm super excited to cap off this workshop series with Noemi and her Finance and Accounting for Business Growth workshop. So with that, take it away, Noemi.
Hi, everybody. I just want to say, first of all, thanks for the opportunity, Melissa. And I'm really happy to talk about finance and accounting. A lot of people sometimes can find the topic very daunting. So I try to make it as digestible as possible. It's an interesting presentation, but we'll make time for question as well. And once you have a grasp on your numbers, it really changed the way you would handle your business day to day, and it's a game changer. So I hope that you don't find it too daunting. I try to make it as accessible as possible, but we'll get started. Okay, so the different topic that we're going to cover today in this workshop are an overview of financial statements, how you choose your accounting system, how do you deal with your business expenses, your tax obligation as a business, or even if you're self-employed, budget, having a budget and having a cash flow management system is very important, and some do's and don'ts to avoid sometimes some mistake when it comes to your accounting. So the workshop was taught for people that are recently incorporated, or if you're planning to incorporate your business in a few months. But to be honest, if you have a business, no matter how long you've had, and accounting is a bit like a thorn on your side, this workshop will be valuable for you. So yes. Melissa already did a presentation, so I'm not going to repeat, but I'm just going to say that the firm Accountability ND is a full service firm. So we offer bookkeeping, corporate tax filing, payroll management, income tax, or anything that has to do with what a business needs when it comes to accounting. We offer their services, and we're virtual. So that's why we service primarily in Quebec and Ontario. Can everybody hear me very well? Yeah? You guys can hear me?
Yeah,
okay.
Perfect.
Perfect. Okay, good.
Then you're switch to the template format / font. Okay.
Oh, I think somebody has a mic open, maybe.
Yeah, I'm quick to mute folks who accidentally go off mic.
So. Okay, perfect. Good. Okay, so a comprehensive overview of financial statements. So when you have a business, most time people will talk about three reports. So the financial statement, what they do is like they give you a summary of your financial transaction, and they also give you a picture on the health of your business. So the three report that you mostly going to talk about the most. First one is the balance sheet. So the balance sheet shows what the business owns, which we call assets, and what the business owes, which is liability. And it shows how the business used both asset and liability to generate income. And this is something that tracks the business for its entire existence. Then you have income statement. The income statement gives you a picture of your revenues and expenses for a given period, usually a fiscal year, so 12 months. And after every like fiscal year, it restarts at 0. So you don't keep the numbers over time. And then you have your cash flow statements that shows how the business managed its cash. So money going in, going out, and it provides an insight on how the business use its cash to fund the operation, pay debts, and also manage investments. With that being said, usually to be able to generate those reports, you need an accounting system. And usually it's like, where do you start from if you're not an accountant? I'm going to present a few. The one that I'm presenting are not everything that's available in the market. There are others that I probably will not mention, but I just wanted to show different type of accounting system and help you in your reflections. Like, what should you think about when you want to pick an accounting system? You want to pick something that is flexible and that can grow with your business. You can start small, but if you have big ambition and you know that your business is going to scale, ideally, if you have something that can grow with you, it is less painful than you having to change your accounting system once you reach a certain level of your business. You want something that is user-friendly. If you're not an accountant, you still want to understand what's going on with your numbers. You don't want to be overwhelmed by the interface. And you also want a system, especially if you go with a cloud-based accounting system, that can incorporate different other systems that you have within your organization. So can you process payments? Can you send invoices? Can it help you with tracking your budget, project profitability, etc.? The one I'm going to show things, they're not in like importance, it's just different. The order doesn't really matter, so don't take that as a given. So the first one that I'm going to talk about is QuickBooks, because it's known and is widely used. And a lot of people, if you don't use QuickBooks, maybe you've heard about it. Some of the benefit of that tool is that it's pretty robust and professional, and it offers a wide range of accounting features, invoice management, payroll processing, financial reporting. It integrates with a lot of tools in the market, and is also very easy to use. If, let's say, you start with QuickBooks and you're just getting started, you just want to manage your expenses and your invoicing, you don't really have budget, you have a plan for that. But if you need grow over time, all you have to do is just change your plan, and you don't have to, the software remains the same, you just have more functionalities available to you. Some of the limitation can be the cost. If you're just getting started, or if you really budget conscious, maybe QuickBooks might not be the best tool to start with. And if you have no understanding of accounting, you might find it too complex. So some tools can be easier to begin with. Then we have Zoho Books, which is a good alternative to QuickBooks. They have a free plan if your business generates less than $50,000 a year. So it can be a cost-effective choice for small businesses and freelancers. They also have like a comprehensive tool suite. It's a bit like a Google. They have email, they have CRM, they have a lot of other product that works with the Zoho Books. And so if you're looking for a more like complete option and not just thinking about accounting, it could be something to consider. And you can also customize the look of some of the tools to reflect your business image. In terms of limitation, the learning curve is a bit steeper and it's not as intuitive as other accounting softwares. Then you also have Wave, which has a free plan. There's no limitation in terms of income generated, which can also be a cost effective option. It is really easy to use, very user-friendly. You have the invoicing feature that you can customize. Where it can become a bit tricky is if you need more advanced feature or more reporting. It is the reporting functionalities of Wave are not as intuitive and not as easy. So once you have more activity, it will not be sustainable long-term for your growth, but it's a good place to start. And then what I tell all my clients is if you have to choose between a shoebox with all your receipts and an Excel sheet or a Google Sheet, I would always recommend a Google Sheet, because then if you go or Excel, because if you go and see your accountant, if it's already, if all the data is already entered somewhere, you will save a lot of time and cost in data entry. So one of the benefits of such tools, like they're very highly customizable. If you use Google, if you already have Microsoft Office, you already have the tool, so there's no extra cost associated with those tools. Some of the limitation, it can be prone to a human error, and you don't have any system to track those errors. There's no automation. And also you don't have central storage of your receipts. So you have to make sure that anything you enter in Excel, you have either a drive or something else where you keep all your records of the documents that you are going to use to populate your Excel, your spreadsheets. Now that we've seen some tools and what to consider when you want to pick some tools, the next important thing is how do you manage your expenses? So basic thing is, how does business expense work? For the most part, any expense that you incur to generate revenue for your business will be considered as business expense, and it is acceptable. You have two types of expenses. You have fixed expense. So these are expenses that are usually always the same over time. They don't fluctuate. So it can be rent. If you pay your self-salary or your employee salary on an annual basis, that will be considered a fixed expense. Insurance, things of that nature. And then you have variable costs that varies based on usage or production or business activity. It can be equipment, it could be self-commission, delivery fees, things of that nature. So once again, basic principle, any expense that you've incurred to generate business, to generate like revenue or to conduct business will be deductible, and you can claim it in your business. Now that I've said that, okay, what exactly does that mean? Because that's very generic. I'm just going to give you a list of expenses that you could claim within your business. Number one, advertising and promotion. So if you use Google Ads, billboard, if you go to an event and you print like I forgot how you say that again, but banners with your business and you attend an event, those are acceptable business expense. Office supplies, pen, paper, ink, stamps, anything that you need for your office. Travel expense. So if you need to take the bus, if you pay for parking, if you have to take a flight, if you use your personal car to go and meet clients, all those travel expenses are, for the most part, acceptable. Training costs, if you need to go back to school, if you need to attend a seminar, if you need to attend a workshop, anything that will help you develop skills to run your business are acceptable costs. Insurance, so if you need a liability insurance, if you're renting an office and you need insurance for the property, for the most part, those are deductible. Professional services, lawyers, accountant, any expert that you need to hire to help you take your business to the next level or help you manage your day-to-day operation is also acceptable. Rent, so that speaks for itself. Salaries and benefit, so your own salary, your employee salaries, if you give them health insurance plan, retirement plan, those are expenses that are deductible. Technology expenses, computers, hardware, if you have a data center somewhere to run your business, that's deductible. And then if you have a bank account, you pay fees for that. You send wire transfers, any of those expenses can also be claimed. I'm giving you a list of current like common expenses, but those are not limited. If you go to the Canada website, I think it's pages and pages of expenses. But when you get started, this is a good place to start to know what can I put into my, what are deductible expenses for my business. Some exception when it comes to meals. So if you take a client out for a restaurant, you take your client to an event, usually you can only deduct 50% of that expenses. Gift also, you can have gift for your clients, but you want to be reasonable in the amount, and it also has to be like a legitimate business reason. I usually tell my clients that you want to have a gift, depending on like the nature of the business that you have, how much revenue you've generated with a client or like a contributor. You don't want to go over 500, and you want to make sure that there's no conflict of interest within the gift that like just think for yourself, okay, if I give this gift, would this person feel like more obliged to give me business, or can it leave? If there's reasonable doubt, then don't do it. And for your employees as well, you want to avoid anything that is cash or cash equivalent. Let's say you do a contest and you give them gift card once in a while, that's fine. But if you give them like gas card every month or every week, then it will be considered a taxable benefit because it's as if you are giving them additional compensation in indirect manner. So that's also something that you want to be mindful of. Things that are not deductible, personal meal, lunchtime, you go and buy yourself lunch, you can't deduct that because the assumption is as a person, you need to eat every day, whether you do business or not. So that's not deductible. Professional clothes, unless it's branded clothes with your business or uniform, you go and buy yourself a new outfit, you have a presentation, a webinar, like you cannot deduct that. Beauty treatment, you're a public figure, you need to go on TV, make a speech, you get your beautician, you get your nail done, hair done, all that cannot deduct. If you have government fine or penalties because you paid late or things of that nature, you cannot deduct. And also, if you get parking ticket or any traffic ticket that you get, those are considered personal expenses. Now, with that, so that's an overview of expenses. And now I'm going to go to a tax obligation if you have a corporation or even if you're in business or you're self-employed. I spoke about like Ontario because I this is the main audience, but wherever you are in Canada, sales tax management, the logic is pretty much the same. If you make less than 30,000 a year in revenue, you do not have to charge sales tax and you don't have to claim it for your from your client. But as soon as you make more than 30,000 a year, it is mandatory that you have to register for sales tax and you have to charge it. If you don't have any sales, a valid reason to register anyways, if you have a lot of expenses, like if you have to buy a lot of equipment and you know that the amount is going to be considerable, you can register because then you will be refunded for the sales tax that you have paid. So it could be a good idea to register even if you not have a lot of sales yet. For the remittance of HST, it depends on how much you make in a year. So if you make over 6 million a year, you have to pay every month. If you are between 1.5 and 6 million, you can pay quarterly. And if you make less than 1.5 million, you have to pay, you can pay annually. But if you pay on an annual basis, you're still going to have to make provisional payment every quarter because the logic is it's not your money, it's the government's money, and they want to make sure that you pay them on time. So that's why they they might allow you to file the amount once a year, but every quarter, based on how much you made the previous year, they will ask you to pay like a provisional amount. Quick accounting method. This is something that a lot of people do not know about, but it does, depending on the industry that you're in, you can apply for the simplify accounting method. The way it works, it will calculate how much sales tax you have to pay based on your income alone, regardless of your expenses. This is usually if you are a consulting company, a tech company where you have a lot of volumes of sale, but you don't have that many expenses. So if you were to pay the normal sales tax calculation, you might be penalized because you will pay a lot of sales tax. But when you go with the simplified method, the percentage that you pay is slightly lower. And so it's kind of a way for you not to pay too much tax. But some industries are not eligible for that. Next deduction that you have to pay, if you pay any salaries, then there's payroll deduction. As a company, you have to remit the employee and the employer portion of payroll deduction. Usually you have income tax, employment insurance contribution, Canadian pension plan. It's really important also because it is not your money, it is the government's money. Like those are the things that you want to pay on time because the penalty and interest can be very steep. And the frequency will also depend on how, like the volume of your monthly wages. It can be annually, it can be quarterly, it could be monthly. It really depends on how much the value of the wage that you pay during a year. And if you have more than $1 million of wages, there's also the employer health tax in Ontario that has to be installment tax payments. So I mentioned about like provisional payments. It can apply for sales tax, employee deduction, but also income tax. When it's your first year of business, usually you don't have anything to do because you don't have a history. The government does not know how much you're going to make. But after year one, if you have make more than $3,000 in profit, the government would then calculate remittance that you have to pay every quarter based on previous year revenue. And what happens at the end of the year when you file your income tax, if you've made less profit than the year before, then they will refund you the excess that you have paid. And if you bet a bit more, then all you have to pay is the difference. So it's a good way for you also to manage your cash. And at the end of the year, you don't have to scramble for like maybe 15,000 that you did not plan for by paying quarterly installments. And that will take us to our next topic, which is cash flow management. So sometimes it's something that as a business, we run our business and we get cash flow, and the government is really aware of that. So that's why if you have an annual agreement with them, they will still ask you to pay provision amounts from time to time. Okay, so as I mentioned, now we're going to look at budgeting and cash flow. Usually, this is where people become very, very cringy because looking at number can be stressful. You know, you don't know where to begin. You have anxiety, but you have to remember that planning will be your key to success. If you don't know your numbers, if you don't know what's going on in your business, you can make decisions based on gut feeling, but your numbers will confirm to you if what you're feeling or what your instinct is telling you is actually accurate. And then you can also pivot a lot quicker when you know where you stand. With that being said, budget gives it guides your business activity and it gives you a clear financial direction. It helps you know what are your priority for a given year, for a given quarter, for a given month. It makes sure that you have enough money for your resources, like what be it people, if you want to invest in a project, if you have to buy materials. If you don't know where your money stands, then you can plan in advance for that. When you make your budget, usually ideally you want to do it monthly, but depending on your volume of business, you could at the most, you can do it like every 3 months. For the cash flow management, it shows you like how much liquidity you have at any given time. It helps you plan for expenses. You can decide, okay, if I have 3 bills to pay, one is due now, one is due in 1 month, and one is due 2 months from now. Okay, then when am I going to pay it? Do I have enough cash coming in to plan for those, to pay those amounts? Ideally, the cash flow, you want to look at it every week, at least once a week. But if you have less activity, then you can look at it monthly. So we've talked about budget, we talked about cash flow. How do you structure it? So if you were to make a budget, these are the different categories that you can do like a simple Excel spreadsheet. And I would look at my sales, all my revenue. If you pay insurance, then you can have a travel category that will cover parking ticket, gas, car payment, license, registration, anything that pertains to your travels. Office supplies, stationaries, postage, small equipment, anything that is under $500, you could put in that category. Meals and entertainment, take your client to restaurants. You are planning to take your staff to an event, you have to rent a venue, that will go there. Marketing, include advertising, gift, any promotional event, your website is also something that you put into marketing. Public services, phone, internet, electricity, gas, that's what you would put in there. Legal and professional fees, well, legal fee speaks for itself. And then any professional or consultant that you hire to do something within your business, you would put them in the same category. Then tax and licenses, corporate income tax. If you are a professional and you're part of a professional order, or you need some licensing to be able to run your business, you want to plan for that. You also have bank fees, salaries, contractors. So these are the way that you could structure your budgets and your cash flow and track it week to week, month to month, or at the most every quarter. So some do's and don'ts for success. Some common mistakes to avoid. And I say this because I know sometimes I see my client, they come and see me. I've not done my accounting for a year. I was just too stressed out. The more you wait, the worse it's going to be. So take the time, like when you plan your work and when you run the business, every Monday, every Sunday, like once a week, try and do some bookkeeping. If you're doing constantly, it will not be as daunting and you will see things in advance. You can use a software to do it. I've shown a few. You can do Excel sheet. I mean, any way that you can do it. If you're comfortable with pen and paper, do that, but take time, like book some time to look at your accounting regularly. Another mistake to avoid is underestimate the importance of having a proper cash flow. I've had clients start in January, they're having a great start of the year, the sales are coming through, and then come March, it fluctuates and they have no money coming in, but they had big expenses they have to pay, and now they find themselves in a tricky situation because they didn't have a cash flow, they didn't plan for it, they didn't think to look for financing in advance. Sometimes you might need to get a line of credit, you might need to apply for a loan, but you always want to apply when you're in a good financial position. And when you look at your cash flow over time, you can see some of the dips, some of the high, and you can plan and be proactive about your cash. Another mistake that people do is mixing personal and your business expenses. Even if you own your business, you have to remember that the business and you are two separate entities and you want to separate everything. If you need money from the business, pay yourself a salary or transfer the amount that you need into a personal account. And as much as possible, try not to do any personal transaction with the business account. And same thing, if you need to buy things for the business, try as much as possible to buy with your business cards and not your personal accounts, especially if you don't keep track of your accounting. Full circle, after a year, try to remember what the expense was. If you still have the receipt, it can become a bit of a nightmare. Another tip that people don't know is when you have a business, people tend to choose December 31st as their year end. Unless you have to, because of the nature of your business or the industry that you're in, I would recommend not to do it because first of all, December 31st is the busiest season for accounting. You start January, February, we have tax, we have payroll, like it's just very busy. And also, when it comes to tax benefit and like planning for taxes, it helps not to have a December 31st year end because then you have a bit more flexibility and you can play around. Like it's legal, like it's very legally, but you can play around with like your salary, your wages. If you borrow money from the business, it gives you a bit more flexibility. So my advice to you is look at if you know how your business run, if you know what your busy season is, try to like pick your year end at a time where after that you have like 2-3 months of like downtime to do your accounting and file your taxes. But if you can avoid December 31st as a year end, avoid it. Perfect. Another mistake, not keeping all your receipts. If you know you lose paper, take a picture, use Google Drive. We have technology now. There's a way for you to keep your receipt organized. If they're not organized, at the very least, it's not fine, but keep a record of them somewhere. Waiting until the year end to determine how much you're going to pay yourself. You don't want to come December 31st. Okay, so how much do I claim in salary? Like, you know what you need to live. You know your family situation. Try to plan in advance how much you would like to pay yourself month to month. If you know, then you can plan. And if a month business is tight and you cannot pay yourself, you can decide to postpone like one salary, but don't wait at the last minute. Sometimes it's good to meet with an accountant or a tax specialist also to know what would be the most optimal way to compensate yourself. It can be 1 hour, but it can make a whole difference. And another thing also that people tend to avoid is meeting a professional like early on in your business. Sometimes like, yeah, I'm an accountant and I know like it can be seen as a very like big expense, but you don't have to work with an accountant right away. Sometimes just have a consultation, say, okay, this is my business. This is what I want to do. Do you have some tips for me to manage my accounting during the year so that when I come and see you at the end of the year, it's not just, okay, I get your numbers, I do your financial statement, I file your income tax, I send it to you, and you don't know what's going on, and you go like this for years on end. If you are proactive with your professional, that they will give you advice, and when you can meet like once a year, twice a year, and then when you have more money, meet with them more often. But if you can book yourself even a 1 hour consultation, some professional also when the first consultation is free, so just meet with one, write down your question and take the most out of it so that you know that when you run your business and you do your accounting, you have a good foundation that you're starting on. So that's it for the intro. I know it's a lot of different points, but I try to really pick like essential things that you would need as a business owner. And so if you have questions now, I'm going to open the floor to answer your questions.
That was very, very informative. The hands are starting to pop up. Thank you so much. That was that was such a great overview. And this is the first time, like I said, I've heard it so simple. So thank you. This is amazing. The hands popping up. So we'll start with Tolu, who has been waiting patiently for a while. So Tolu, go ahead.
Thank you. Thank you so much, Naomi.
Noemi, yes.
Naomi.
Nice to meet you.
Nice to meet you. I have a question. Like last year, I began operation fully, and I've filed my tax, the business one, this year. However, I need to understand the meaning of the tax refund. Is it coming to me as money, or they just keep it in my account? Then if I have like maybe is it a tax credit? Am I getting it back? You said something like a refund. I get confused because right now I have some money with the government. They need to give it to me.
Okay, so it depends. Like the government, usually what they do, if you overpaid them, they will keep the money in your account and they will push the money for next year. So if you want the money back, you have to call them and say, look, I've overpaid and I see that I have a credit in my account. Can you please send it back to me? Otherwise, they would just, because it's your business, right? And
Okay.
they expect you to run for year to year. So let's say last year you made I don't know, you paid in $5,000, but you only had to pay 2,000 in income tax. So now you have a credit of 3,000. What you can do is you can leave the money for next year when you file again, or you can call them and say, I have a credit, can you please refund me? Government will,
Really?
yes, if you don't ask, they will just push it to the next year. So
Oh
you have
my
to ask for your
goodness.
money back. Yes.
Thank you.
No problem. If you call them, they will refund you. Yes.
All right. Awesome. I didn't know that either. I'm gonna have to do some follow-up myself. All right, let's go to Oluwatosin.
Yes, hello. Thank you for the really insightful um, chat presentation. So I have about two questions actually. So the first one is about, and they're both about taxes. So with regards to expenses, do they have to be expenses made from your business account? Do the expenses have to be made from the business account? What if I make some expenses from my personal account for my business, does it count?
So the answer is no, it doesn't have to be from your business account, but ideally it should be from your business account. For example, okay, I have a I don't know, Calendly subscription, and I under my like the Calendly is registered under my business, but I paid with my personal credit card. So what I'm going to do is I'll take the receipts and register it in my business, but that expense, I'm going to take it as if me, the owner, lended business to my, like I made a loan to my business because I paid with my personal cards.
Okay, right. Because
So,
I was actually talking about something like subscription, or for
Yes.
instance, if I have to buy like a laptop for my business and maybe the amount, because my business is really new. For instance, if I just have like $200 in my business account and I'm
Yes.
paying for the laptop from my personal account and it's an installment, would that
Yes.
still
So
count as
yeah, it still counts. You just have to make sure that you have the document and you can justify the expense. And with time, either move the payment to your credit card, or sometime take your money, put it in the business account. So it's a let's say I see that my business needs $5,000 and right now my business does not have it. I as the business owner will make a loan of 5,000 to my business, and then I make my purchases with my business cards. So
what
that's
I've
another way to
done,
do it.
yeah, like, can I,
okay.
and I
And the receipt?
I've had to deal with a lot of this, like in starting my fund, and maybe this is helpful, or maybe I'm doing this wrong, knowing me, but when I've paid business expenses out of pocket, just to keep it clean, I have the receipt, but then I also personally invoice my business, and I title it an expense reimbursement. So
Well,
that,
technically, as a business owner, you cannot like charge your business. All you can do
Mhm.
is landed money. So
Yeah.
ideally, depending like how you work with your accountant, you can have a file like, okay, these are all like you keep the receipts and you know that they were
Mhm.
paid from your personal card. And when your accountant will do the bookkeeping for you, they like in your chart of accounts. So it's like, how can I say, like a bit the structure of your like accounting, there's a
Mhm.
line that exists where it's called like shareholder loan, and that's where we're going to put the money. And so basically all the in and outs between you and the business will be recorded there, and at the end of
Mhm.
the year will tell you, oh, the business owes you this amount, or you owe the business this amount, because it could be the other way around too, that okay, you've given so much money to the business and now you need to take some money back, so you take a loan from the business. So any personal movement between you and the business, there's somewhere in your financial statement that your accountant will keep track of it.
All right. And so it's not like an expense reimbursement, it's a loan or repayment of a loan.
Yeah, exactly. It's a loan or repayment of a loan. And one thing that you have to be careful with is,
Mhm.
let's say you borrow money from the business,
Mhm.
and your year end is December 31st. You can only leave a balance for 2 years. So you can borrow from your business uh, free of charge for 2 years. But after 2 years, you either pay the money back or you claim a salary or a dividend. You have to put the balance at zero every 2 years.
Okay, good
So
to know.
you also have to be careful with that.
Thank you. Okay, I'll
No
leave it for
problem.
everybody else now. Thank you.
I don't know if I answered your question properly. Did I?
Yes, you did. And then my
Okay.
last question, please. So regards the registering for taxes or having like a
Yeah.
tax number, you said if the business is earning less than 30,000, you don't have to charge, I don't have to charge taxes, correct?
It's not, yeah, when you're under 30,000, it is at your own discretion. You don't have to charge it. But as soon as you register for sales tax, doesn't matter how much money you make, you have to charge it.
Okay, so how would I get the refund? How would I get the tax refund if I don't register for sales taxes?
If you don't, that's the thing. If you don't register for it, you don't get a refund. But if you have a lot of expenses and you think like, I don't know, you have 10,000 worth of expenses, then you might still register so that you can get the money back for the purchases that you make. Because the way income tax, sales tax works, it's like a net effect. You have to give the government the tax that you collected, and they pay you back for the tax that you have paid, right? So it's a net at the end of every quarter or every remittance period. So if you know that you have a lot of expenses, even though you're not making a lot of sales yet, it might be worth it for you to register. But when you do that, you have to know that at your no, like as soon as you sell something, you have to charge sales tax to your client, and you don't have a choice. It's mandatory.
Okay, right.
Yeah.
Right. Okay, I think that's it. Thank you so
No
much.
problem. You're welcome.
All right. I think Danielle already went. So Ellie, Danielle, you went, right? So it's
No,
Ellie's
not
turn.
yet.
Not yet? Okay, go ahead, Danielle.
Okay. Okay, cool. Thank you so much, Noemi, for the presentation and for the discussion. It's very interesting.
You're welcome.
My question is actually a follow-up to what has been discussed already regarding personal and business expenses. And maybe I can give you like a specific example with my business. So because my business is so very new, what I've been doing, and again, I'm not sure if this is even correct, but for a few months before actually launching my business and like starting operations, since I still had a job, like a full-time job. So every month I was kind of like transferring some money from my personal account and kind of giving that, or I guess lending would be the proper term here based on what you've said, kind of lending that to my company so that I could manage some expenses later. So I was kind of treating it as one of like, if you think about like personal finances, like, oh, maybe like a high interest savings account, like you make a regular transfer. So that's what I was doing. And so it really helped with paying certain subscriptions and just like revolving expenses that I had in my business. My question is like, first of all, is this I guess the right way or like one of the ways to go about lending money to your business, or should you just make like, I guess, big deposits of like, oh, here is $1,000 or like $2,000 for your business,
No,
or
it doesn't have to. I mean, the way you're doing it is actually right. It doesn't have to be a big amount. Like I just took big numbers, but you need like business need $50. You don't the business doesn't have it. You do a transfer. Perfect. It doesn't have to be a big amount. But sometimes when you get started, like the business is new, there's nothing, and you're actually funding your business.
Yes.
So that's the way for you to put money in the business.
Okay.
And then later on, like because that's something that when you take that money back, you don't have to claim, you don't have to file like income tax on that because it's a
Yeah.
loan that you put in and you take out. So when your business becomes profitable, let's say you gave 10,000 and you take you take out 30,000 out of the business, that you know that the 10,000 is free of charge because it was a loan, and then you will only claim either a salary or a dividend on the remaining 20.
Got it. Okay. And so what about the instances where even with doing this, like transferring a few $100s every month to my business account, what about the instances where I've had to like personally buy something because even the loans that I was making to my company weren't
Was not
enough
sufficient.
yeah, so I had to make the purchases myself.
Yeah, keep the receipt and we will record that expense in your business and we will show that it is also you that gave a loan to the business. So it doesn't matter whether it's from your personal card or you putting money into the business, as long as you, the business owner, fund the business, we keep track of it in your financial statements.
Okay, perfect. Thank you so much. This is very
You're
helpful.
welcome. Any other questions?
Looks like Ellie's next.
Hi, Naomi. Thank you so much for the presentation. Very informative, very insightful. I really hope, I don't know if it's possible to get the PowerPoint slides if you're comfortable with sharing them. I think there's a lot of, okay, awesome.
I'll send them to Melissa. Yeah.
Oh, perfect. And
Wonderful.
yeah, I will definitely look out to reaching out for consultation because there's a lot of financial literacy that I'm lacking for myself personally and the business. So yeah, I'm very excited about that. In terms of my question, so it kind of echoes a little bit about other people's questions, but I incorporated my business in the middle of December. So obviously end of year, and I'm a little confused on should I be filing for taxes? Like obviously I only have strictly expenses like app development, website, all of the spiel. But I don't know what to do if I qualify right now, or I got a little lost in terms of like you said something about receiving money back for expenses or something like that. I got a little lost there. So I just wanted clarification on what I should be doing in that aspect, if you're able to say.
Okay, so I'm just gonna repeat my question to you, so I make your question to to you, so I make sure I understand. So is it that you want to know when should be your fiscal year, or you want to know like when should you file like your first year of business? Like, what exactly do you want to figure out?
I
Sorry.
think I'm trying to figure out if I should register, not sorry, not register, if I should file for taxes now. Obviously, I think my fiscal year was between the end of December until like February or something like that. But I'm just not sure if I'm doing it for the following year because it's end of the year. And also, I'm not sure if
Yes.
I should do it because I only have expenses. So I'm very new to this.
Okay. So that's something I didn't mention, and I'm gonna answer your question and add some information. So usually when you incorporate your business, so let's say you incorporated end of December, the logic is that your fiscal, unless you want it to be different, your fiscal year your fiscal year end would be January of the following year, right? So you incorporate December 2024, and your year end can be up to January, January 2026, if I'm not mistaken. Anyways, 12 months. But if you want your year end to be June, you can say, okay, my fiscal year end will be June of every year. So then you will have December 2024 to June 2025. You can pick. And the way that you pick is like, okay, if you know your business, you know your industry, when is my busy season? Like, okay, if I know that in the summer months I'm very busy, then maybe you want your fiscal year end to be in the fall, because you have 3 months to pay what you owe, but you have 6 months to file as a business. But for you to know, and you know that, okay, by the time it's my year end, the following month or the 2 months after, my accountant will talk to me, ask me questions and things like that. So you have to be available to talk to your accountant. That's why you don't want to, ideally, you don't want your year end to be when you're very busy. But you also don't want your year end to be December, because then, for example, you want to borrow money from your business. If your year end is December, that means every December you have to claim whatever you borrowed from the business. But if your year end is June, then you give yourself like a year and a half to borrow, like you give yourself a bit more leeway, and you have a bit more flexibility as your business grow. And you will see the value of it later on. But just like, it's something that people don't, because you think, oh, a year is January to December, fine. But as your business, if you can avoid December 31st as your year end, avoid it. Now, the next part of your question. First year of business, all you have is expenses. You're not profitable, no problem. When you're going to file, you're going to file at a loss. But that loss, you can carry it over for, if I'm not mistaken, 10 years. So let's say the year after, you make $30,000, and this year you made a loss of 10. So when you're going to file the following year, you're only going to have to pay income tax on $20,000, because the first thing you're going to do is like, oh, previous year I had losses, apply my loss to my current profit, and then I will pay income tax on the difference. So it doesn't matter that if you're not profitable now, it's not a loss. When you make profit in the future, you will be able to apply, to apply those losses on your future profit.
Okay, great. Thank you so much. You answered
Okay,
that
good.
perfectly. So this is great. Thank you again, Naomi.
Great, you're welcome.
All right. Before we get to Tolu, Talapo had one question. She said, how do we register it as a loan for our business? I think I know the answer, but I'm probably going to say the right thing. I'm not going to say the right thing, Noemi, so I'm just going to let you answer it. So when we are paying for things personally on behalf of our business, how is that tracked or recorded in our bookkeeping?
So in your bookkeeping, usually it's called a shareholder loan. It's really hard to explain, like, unless I do your bookkeeping, but let's say you will see like, okay, $300 on my credit card or $300 on my bank account. When I'm going to do the bookkeeping, the category I'm going to use is loan to shareholders. That's just the way it is.
All right. So essentially, if you're using software, that's the category you select. If you're using Excel, that's probably like what the line item name is going to be.
So if you're using Excel, if you're using Excel, what you should do to make it simple, put that it's a software transaction, but then use a color code to say, okay, any transaction in yellow were paid from my own pocket, and the rest were paid within the business. So then your accountant will know with that information, your accountant will know what to do. Because if I explain to you the next step, that means we're doing an accounting course. I'm not sure that's what you want to do.
Yeah.
But to make it easy, just if you're using a spreadsheet, use color code. One colorful one that you pay from your pocket, one colorful what has been paid from the business, and in the description, just say, okay, calendar subscription, whatever the purchase is, and then the accountant will know what to do.
Okay,
Okay,
perfect. Thank you.
great. Thank you. Let me just make sure okay, great. Okay, excellent. Tolu, back to you.
So sorry, I'll let Amaka go. I already dropped my question in the chat. It's not really a question. I don't want to interrupt the flow.
All right, we'll come back to it. Amaka, go for it. Amaka, I keep saying that wrong. I'm so sorry.
It's okay. It's okay. Hi, Noemi. Thank you for a very, very insightful presentation. I mean, I'm a sole proprietor right now, so I haven't incorporated my business, and I've been bootstrapping and pop-upping my business in a sense. And I've gotten to the point now where in the fall of last year, I registered the business with the CRA. But we've only had expenses so far, just like the other lady mentioned. And so right now, because I'm not incorporated, but I've registered the business with the CRA, do I still need to file for the business, knowing that we've only just incurred expenses so far, and we would now be starting to like host events come March? Because I want to start filing my taxes now, but technically we haven't really made any sort of sales. So what direction am I going to go in? Do I just do this the following year or file as a loss right now?
So if you're sole proprietor and you've registered
Mhm.
your business,
Mhm.
you have to file with your personal income tax, because it
Okay.
is you, Amaka, that you
Mhm.
do business on your own name, and so you guys are the same entity. So
Mhm.
what you do is that you will track all your business transactions. And the good thing is, if you have an employer and you made a salary, right, but your business made a loss, so you personally will pay less income tax, because the loss that your business incur will reduce the salary that you made as a person. So
Mhm.
you want to keep track of that.
Okay.
So that
Okay.
way, let's say you made like 40K as a salary. I know it's a small number. I just use round figures, but then your business lost 20, you pay income tax on $20,000, because it nets, because it is you as a business. You, the person, do business, so it goes together. So you have to file. I mean, you have to file before April. So any expenses that you've incurred this year up to December 31st, make sure that you have a record of it. Go into your accountant. There's a section for that. I mean, it's going to be a bit more expensive than if you were filing your income tax just as an employee.
Okay.
But there's value in that. And eventually, when you incorporate your business, you could do like a rollover of some of the assets that you had when you were sole proprietor into the business. So yeah, that could be something that you can do.
I don't have an accountant right now, and I typically use Wealth Simple to file my own taxes. So
Yes.
I guess I'll be putting this information concurrently with my own income, right? Like the
Yes.
business is
So
me.
when you file your income tax, there's a section, I think it's T2125, if I'm not mistaken, where it says like business, oh my God, I forgot, business income within your personal income tax. And then you will put like all your, any, I don't know, electricity, car, any expense that you've had, you will deduct that. But this is section, I think it's T2125, if I'm not mistaken. I can do a quick search now, because my memory is not the greatest. I know the things, but I never remember the names.
That's totally fine.
T2125. Yes, T2025
Oh, you were
statement
correct.
of business and professional activities. Yes, that's what it is.
Ah, perfect.
Yeah, I can put it in the chat, I guess, for everybody to see. So I'm just going to put it there for you. That's the section that you're going to find.
Perfect. Thank you, Noemi. I appreciate this.
You're welcome.
All right. And I would probably reach out to you after this.
No problem.
All right. Thank you.
You're welcome.
So speaking of Emika's question, what's a typical price to charge? If you're a small business, you're a small business, and you're getting rolling, and you're now doing say 50 to 100K and revenue, and you're increasing every year. Like, is it worth it to get an accountant at that point, or a bookkeeper? And if so, what's a reasonable price?
Okay, so I'm not gonna answer the question directly because that's,
Yeah, that's fine.
I mean, it's like
Case
it's
by
for
case.
you. Yeah, I mean, it's for you to know if it's worth it. I'm gonna take myself as an example. I'm an accountant. I started my business. I had previous businesses in the past, but when I decided to launch my firm, I had to do my marketing, my branding, and I know how to do it. I can do it, but I told myself the time that I'm going to spend doing it versus paying someone else and then getting more clients, getting more lead, is it worth it? So it's for you to, like, you can do it, and maybe it will maybe it will take you like 3 months to do it, or maybe you'll be so anxious you will delay it. Or if you have the fund, you say, okay, it's an investment. I'm giving it to a professional to do it. You're saving time, you're saving money, and then you can do what you do best. Based on that, you make your decision. Now, your accounting should be within 1 to 4% of your revenues. That's what it should cost you. So if you're making 100,000, it should be within it could cost you anywhere between 1,000 to $4,000. Sorry, not 400,000, 4,000. So if you know if the price makes sense, a general rule is it within 1 to 4% of my revenues. That's a good barometer.
That is let's see if I'm on mute here. Great. No, that's a very good rule of thumb and a perfect answer. Thank you.
You're welcome.
Oluwatosin, go ahead. And then I see that Ellie is asking for your website link. I'm gonna go find it, and I'll just drop in the chat.
Okay.
But Oluwatosin, go ahead with your question.
Yes, hi, it's me again. So from the previous person's question, I think it kind of contradicted my own previous question, because I was asking about when it was time to how would I put it? Okay, so your answer to me was that, if it's less than $30,000 income, then there's really no need to charge for taxes, and then I wouldn't need to get a tax identification number and charge taxes and all of that, because I was asking about expenses. But with her question now, you said it was okay for her to add the expenses to her personal income tax. I'm a bit
No, oh,
confused.
okay. No, yeah, sorry. Okay, what I said is, if you're starting as a business and you are incorporated, if you make less than $30,000, it's not mandatory. So it's up to you. But a good reason to register is if you have a lot of expenses. So even if you're not making money, but you know that you're going to buy maybe 10,000, like 5,000 of equipment, that's a significant amount. So you might want to register just so you can get the refund, but it is at your own discretion. Now, the difference with Amaka is because she is self-employed. When you're sole proprietor, any money that you make, you don't have a choice to claim it, because the revenue from that business activity is linked to your personal income tax. But if you incorporated, you as a person and your business are two separate entities. In Amaka's case, they are a single entity, so she has no choice. But if she makes less than $30,000 in revenue, she does not have to register for sales tax. So income tax, sales tax, they're not the same thing.
Mhm.
I-
Okay, so I'm sole proprietorship.
Okay, so if you're a sole proprietor, you can claim. Okay, so this is a perfect example. Let's say you are a sole proprietor, but you did
Mhm.
not register for sales tax because you are making less than 30,000 of revenue. Okay, and you bought
Mhm.
an item that is $100 before tax. With tax, it'll cost you $113. Okay.
Mhm.
If you have not registered for sales tax, when you're
Yeah.
gonna claim your expenses, you're gonna claim $113 because that's what the item costed you. Okay. You
Right.
include the whole value of your purchase. If you have registered for sales tax, you can only claim the $100. So you claim the value of the item before tax because the management of the sales tax is done separately.
Right. Okay.
I hope it helps.
Yes, I think so. So basically, I can, register those, claim the expenses in my personal
Yes,
income
exactly.
inside of.
You can claim, yes, you can claim the expenses. That is not a problem. But if you want to get a sales tax refund, so for the sales tax that you pay, then that you would have to register. But if you don't register for that because you are self-employed, you just say, okay, I bought my item. You put the whole value of your transaction. It doesn't really matter. So indirectly, when you're sole proprietor, you kind of get the income tax refund because you're going to claim the whole value of your purchases.
Right. Okay. I think that
Mhm.
explains it. Thank you so
Oh,
much.
you're welcome.
All right. And with that, we are at a little after 3 o'clock. We're at 3:01. So that concludes Noemi's session, unless anybody has a burning question. But we will be, again, including her slides, her LinkedIn, and her website in the recap package. So you'll be able to reach out to her and review the slides and everything like that.
Yes.
Again, later. Oh, go ahead,
You're
Noemi.
welcome. Yes, so one last thing, if when you
Yeah.
go to my website, we have an intake form, so you can just complete the form with all like your current business situation. It's a good way for us to kind of know who we're talking with before you have the free consultation, and it's more, there's more value added to it because some of the things I know in advance, and then I can prepare. So
Perfect.
it's a work in process. So you might get a message. If you get a message, just ignore it. Like as long as we get the form, someone in the team will read it and we will contact you. Full disclaimer, this is tax season. So the response time might be a bit slower because we are swamped, but we will get back to you. Just not as quickly as we usually do when it's less busy.
And on that note, thank you for taking your time out of tax season to put together this beautiful presentation and to answer all of these questions. We really appreciate it.